Friends, in this video I am going to talk to you on the topic inflation, the spoiler. Inflation has a potential to make an impact on multiple fronts. As an investor, one can never afford to ignore inflation. When we are making very good returns, the most common spoiler is inflation. Every time we expect markets to recover or do better and fundamentals of the economy to improve, what happens to inflation is very, very important. Inflation affects everybody. It affects individuals, companies, governments. So, how we manage inflation is something we must closely watch. If you look at the last decade, we started managing inflation poorly. Between 2011 and 12, India lost the plot on inflation. Because we lost the plot on inflation, from 2012 until very recently, we have been working on a framework to control inflation and bring it to a level which will help the economy. Having said that, we are at the cusp of reimagining the framework. We have seen people doubt how we will fashion the future approach towards inflation management. The coming months will tell us how the Reserve Bank is going to approach inflation management. So, how does inflation affect individuals? You and I. Our savings potential can come down because inflation pushes up the costs of everything, goods, services, assets. So, our ability to spend or invest can go down. On the contrary, you could also be benefiting from inflation if you are able to pass on the increase in costs in what you do. But that is not the case with most of us. So, if we raise our prices because costs went up, we may lose business and customers, and we will probably stop growing and maybe even degrow. So, whenever inflation raises its head, most people get affected. Few people may be benefiting from it, but the majority stands to lose. The loss of savings affects investors. It makes individuals think before they spend. It makes people defer spending and investment. It makes us worry. It takes away the confidence to spend, and it creates the fear in our minds about interest rates. So, what happens to interest rates? Interest rates tend to go up. So, if inflation is not controlled, it is a matter of time before interest rates go up. So, that again affects individuals, as they could have EMIs and interest rates on their home loans will go up. So, it further shrinks their ability to save, because money which they would otherwise put to better use in the form of savings or spend in ways which they like would be going towards payment of more interest on the same loan. Then interest rates going up tends to make companies think very differently, because they can not afford to borrow more money. They may actually need to reduce their borrowings, and by virtue of that they may not be very confident to invest in the future. So, capital projects can get deferred if inflation rears its head. On the government front, inflation raises borrowing costs for government, and it makes the government's deficit grow more. Effectively, governments lose their ability to spend or invest whenever inflation raises its head. So, if you look at the last decade, towards the end of the decade, the government was able to invest more consistently, whereas in the beginning of the decade, the government struggled to invest, because interest rates becomes a very significant part of their revenue, and it takes away a lot of your revenue. So, interest rates need to be in control. The framework must work. How we take the framework to manage inflation forward is going to determine how interest rates are managed, and we must keep an extremely close watch on interest rates. Now to costs. When you have inflation and when that inflation spreads across commodities as we are seeing now, companies will struggle to pass on the costs. A good part of the costs are forced to be absorbed by the company. When companies do that, their profitability can go down. And when their profitability goes down, the overall profit growth trajectory of the company can change, it can come down, sometimes the profit trajectory can even collapse. So when the profit trajectory turns negative or it faces serious challenges, that in turn will affect the earnings of companies. So companies will not be able to grow their earnings at the same pace they did when inflation was under control, in phases when inflation starts rising rapidly. Lastly, when earnings fall, valuations will become a casualty. So we have seen valuations becoming very liberal during the last 1 year, but if inflation rears its head, it's certain that valuations will soften. So you cannot afford valuations to soften on the back of inflation, because that in turn will affect the sentiment in the market. It will impair the ability of companies to raise future capital, money to grow in the future, money to invest in asset creation, money to raise capacities. All that will become a problem as sentiment will turn negative. That would mean that IPOs will become difficult to put through, the scarcity which you see currently in the IPOs can vanish, and overall people will start deferring whatever they want to do, whether it's saving, spending, investing, borrowing, everything will start getting deferred. This would naturally mean that economic activity can take a pause. So inflation, if it's not controlled, can be a very serious spoiler, and it is very important for every one of us to closely track how inflation is moving and what people whom we respect on this subject of inflation management keep saying. We are seeing a very divided viewpoint on inflation. You have one set of people cautioning that inflation can affect India like never before. In fact, it has done just 10 years back, so they should not be dismissed. And there is another set of people who say that yes, inflation is a challenge, but India will be able to manage it. Where we finally settle in our economy and where inflation stabilizes will have a deep impact on how India finds its growth back and how our economy reaches its pre-COVID size and prepares to grow from there. Thank you very much for watching this video. If you like this video, please share it with your friends who are keen investors, students of economics, and want to know where inflation is going. Stay the course with us. This video is an educative video which I think should be watched and tracked in the future to see how trends pace out. Thank you.